Hello and welcome to Pro Trader Strategies market commentary for the last day of March and the quarter. My name is Eric Wilkinson, and yes, you very well may recognize me as the Wolfman from mainstream media, where I've talked about the economic data, the geopolitical environment, and how that all comes in to impact the markets with some of my market analysis. I do the same thing in these daily market commentaries, but I'm going to go a little bit further and talk about my option strategies that I'm implementing into my portfolio based on those assumptions I come up with in my market analysis. And for you folks, what we've done is streamline the process for you guys to find the optimal option strategy for any given assumption. And you might be saying to yourself, well, if it's bullish, I'm going to buy a call. Not always. That's not always the best way to take advantage of a bullish assumption. And I explain those details in my webinars. So please check those out at protraderstrategies.com. All right, let's get on with the economic data. Across the pond, it's a Wednesday. Not really a whole lot going on. We did get European Consumer Price Index flash estimates, and that came in, flash estimates came in a little bit lower than expected, but pretty much in line with expectations at 1.3%, expected to be 1.4%. And then when you strip out the food and energy, alcohol, tobacco, more volatile aspects of that CPI number, so we call it the core CPI, Consumer Price Index, came in at 0.9%, expected to be 1.1%. So not very good on the price. Usually we see prices rise. That means there's inflation because there's price demand. People willing to spend their money. Well, when you see the prices come off, it means they need to move that inventory. All right, moving back over here to the United States. Chicago PMI Purchase Managers Index coming in at 66.3, expected to be 61.2. Remember, anything above 50 is expansion, and we are seeing some really nice numbers out of this. It's basically back to the levels pre-pandemic on all of the data points that we've been seeing as of lately. We're getting back up into that realm of before this whole shutdown happened. But pending home sales coming in at negative 10.6%, expected to be a negative 3.1%. So really missing on those pending home sales. Something funny to note, I was talking to a friend of mine that's actually considering moving, and he went to a home here in Scottsdale for an open house. And he said there was a line out the door, all the way basically down the driveway for people waiting to get into this house. Now, he said that this house basically was a total gut rehab. And he was, he's pretty handy, so he was willing to do that. He was walking through the house, too, also trying to point out some of the structural defects, if you will, or at least try to downgrade this house a little bit. Well, it ends up being he bid on the house with about 8 other families, and obviously this house went for over what the listing price was. But the fact of the matter is there is very little inventory out there, and that is part of why we're not seeing the houses get sold, because the inventory is so small that you got 10 people trying to buy one house and bidding on it. It's not just like they're interested in it; they literally went out there and bid on it, and that is the type of seller's market we are in for new home sales, but that does not help that number at all, especially with home prices elevating. We've seen the median home price go from basically $320,000 to $350,000 in the last probably 6 months. So that's a pretty massive move to the upside, almost 10% increase in just 6 months. Also, we got the, sorry about that, the home sales, I think I'm about done with that anyway. I lost track. But anyway, crude oil inventory is coming in at a drawdown of only 900,000 barrels, expected to be a drawdown of 1.3 million barrels. That isn't showing any demand there. We haven't seen any production cuts. Something that we are going to be looking forward to is tomorrow. OPEC Plus is meeting, and they are going to be talking about continuing these cuts probably for the next 3 to 6 months. I don't know if they're going to actually do that, but that is what we're going to be watching for coming out of this meeting tomorrow. All right, so let's talk about the economic, or the equities and the overall markets. We've got crude oil slightly moving higher despite the fact that we did see a bigger than expected build there, only by close to 500,000 barrels. And bonds, are we going to make a bottom finally here in bonds? Maybe we break in this lower lows, lower highs kind of pattern. We've not gotten that lower low, so breaking out above basically 157-ish, getting into that 157 handle would be a breaking of that bearish trend there. And hopefully we can get above that to kind of get some move to the upside, lower some interest rates. That could help pending home sales as well, or at least home sales. Gold futures moving up by $20 today, following suit with Bitcoin up 300 points, $500 right now. But something to note here, we are moving higher lockstep. Are we creating a bit of a head and shoulders here is what I'm watching for. We start correcting here, and we got the neckline here. I probably could do a drawing real quick, do the neckline pretty quick and dirty as I'm trying to chat about it. But the head and shoulders pattern here, you can see we've got one shoulder here, a head here, and then another shoulder here. So basically watching for that line to be breached. That would break that neckline. That would create that head and shoulders pattern here in Bitcoin. So if you're in Bitcoin, keep an eye on that. It's just a nice setup for a head and shoulders there. Not that it's going to happen, but it looks like it very well could. All right, VIX is unchanged for the most part here. We've got the Dow Jones unchanged for the most part, right? 30 points can be made or lost in a matter of moments. We've got the NASDAQ, though, moving higher today. That reopening trade not looking so good. Biden really pushing on some of the states like Arizona that opened up with lifting the mask mandate. Now that is only government land for the most part, so shop owners and stuff like that are allowed. Private businesses can keep their mask mandate as long as they want, really. All right, but we've got the NASDAQ moving higher. That reopening trade not working. We're seeing the tech sector start to make some moves to the upside. E-mini S&Ps up 25 points on the day. Now, I was looking at yesterday making a topping pattern here where we were looking like we were confirming that. Again, a bit of a head and shoulders type look happening here with a tight neckline. But today that pattern has been broken in the E-mini S&Ps with this rally, especially if we start finishing near the highs of the day. You can see overnight inventory was long and no attempt to flush those guys out. Very bullish coming into today. A lot of pre-market buying in the equities, it seems like these days. So that gave a little bit of boost heading into the day session and continued on throughout so far today. All right, so a couple of things I want to talk about. Now, PENN, I can't remember. For some reason, I feel like I didn't talk about this on Monday and then again forgot to talk about it yesterday. But I want to make sure that I covered this because I have taken off my covered call strategy in the April short 190 calls in there. I had originally sold for 136. I covered it last week for 10 cents. And I can't remember if I forgot to talk about that or not. But anyway, with that being said, I've lowered my overall cost basis on this trade by about negative 150-ish. So 126, and 26, so basically 152 is my negative ownership on this trade. So lowered my overall cost basis to a point where I'm in negative territory on this trade. But want to make sure that we are clear on that. If you still have if you were following my trade and you were in that covered call strategy, you probably get out of those covered calls a lot better. I like to get out of those right around a nickel. And having said that, even on cash secured puts, I like to get out of those for about the same as well. Even just given the opportunity that I can take advantage of it on another pullback. So if you guys remember in the Apple, I have two different trades on. I am short the 110 puts and the 105 puts in the April. I sold the 110 puts and the 105 puts in the April on some cash secured puts. Was looking for doing some dollar cost averaging it down in and around this area. Now we have found some really nice support right around that 120 handle, which lines up with our Fibonacci of the 78 here. Now, so I want to take off some of these trades here, lower my, if I get a pullback, I'll I'll look to add these obviously, but I want to cover it for about 10 cents. So in those April 105 puts, I'm trying to get out for 10 cents. Originally sold them for 104, and right now they're trading for around 14 cents. So I'm about a dime, or sorry, about a nickel away there on that trade. I haven't put it in an order to get out of my April 110 puts that I'm short. Those are trading around 26 cents. But again, if I can get out for about a dime, I'm going to look to do that as well on any of these types of trades. Covered calls, cash secured puts is really where I like to get out of those, because then you can have the opportunity to jump back in if we get another pullback. All right, so Apple, I just wanted to talk about that. That is a working order. It is not filled as of right now. And then with IBM, yesterday, late in the afternoon, we had a bit of a push to the upside in IBM. And if you guys remember, I did the April where I am long the 130 puts and short the 125 puts in my trading account. And I did that for the basically this webinar on swing trades. And I kind of got in a little bit early on this in my trading account. Obviously didn't get confirmed. We got blasted off to the upside. I didn't get out of these because that's the beauty in options. You know, if I was short this underlying on this type of move, it would have been very friggin' painful, folks. But because I have on a spread that I know I have defined risk on, I'm not as concerned about that. I can keep my powder dry. So this market blasted off, went up to that 136 area, and started making some moves to the downside yesterday as well. That was a confirmation yesterday, so I decided to get into this in my IRA. So I did the same trade where I have on the April long the 130 puts and short the 125 puts for IBM that I threw over there in my IRA. So working out that, just want to make sure that I'm going to double check on my price, and I paid a debit of 156. So that's in my IRA now. So working out both of those there in my trading account and IRA, but want to make sure everybody was clear of concept. What I was getting going here, I was taking a look at Under Armour. My buddy John Nigerian said there was some unusual option activity in here. Basically, it looked like somebody was buying the 18 and a half call spread in there, and probably didn't put a whole lot of money on the line there because it was a very tight spread. So it looks like it's more of just a swing type trade or a day trade on that. I don't think it's anything major because it's just too tight of a spread. Or somebody could be buying the 18 and the 18 and a half calls in the front month, or in the spot month, which is not a place where I would be looking to buy options. Why? Because of all of that theta decay that we're seeing happen in and around this particular underlying. But yes, those were bought early this morning on some unusual option activity that John Nigerian let me in on. All right, so that's it. That's all I've got for you folks. Other than I'm going to be preparing for our swing trades webinar here coming up, where we're going to be finding swing trades and implementing options around those shorter duration type trades. So make sure you check that out. We'll talk a little bit about candlestick setups and stuff like that in those webinars as well. So if you can't take that, take it easy. Oh yeah, and check out our disclaimer.